Hi everyone. Welcome to my channel InfoCraze. In accounting, two terms often cause confusion in the minds of beginners. These are accounts receivable and accounts payable. Today, we will understand these terms in a very simple manner, and also the way these are treated in the books of accounts. At the end of this video, I will also share the importances of accounts receivable and account payable management, which are very often asked in job interviews. So, please watch the video till the end. Here we go. Let's take an example, which will help us to understand these terms easily. Suppose John owns a bakery business. A local coffee shop places an order of 100 muffins for their grand opening to John's bakery. John's bakery delivers the muffins to the coffee shop and send them an invoice for $200 with a payment term of 30 days. That $200 is part of the accounts receivable for John's bakery till the payment is received from coffee shop. In order to make muffins, John's bakery buys flour from a nearby supermarket. When John's bakery receives the flour, they also receive an invoice for $100 from the supermarket with a payment term of 15 days. Thus, John's bakery now has an obligation to pay $100 to the supermarket against the purchase of flour. This amount will be part of accounts payable in the books of John's bakery till they pay this to the supermarket. Thus, accounts receivable represents the money that a business expects to receive from its customers or clients for the goods or services delivered, but not yet paid for. On the other side, accounts payable represents the money that a business owes to its suppliers or creditors for the goods or services received, but not yet paid for. Accounts receivable is an asset on the company's balance sheet, whereas accounts payable is a liability on the company's balance sheet. Accounts receivable is grouped under current assets in a balance sheet, whereas accounts payable is grouped under current liabilities in a balance sheet. Accounts receivable is also known as debtors, receivables, customer receivables or trade receivables. Accounts payable is also known as creditors, payables, vendor payables or trade payables. Now, let's look into the accounting entries in the books of John's bakery for the transactions with vendor, that is the supermarket. For credit purchase from supermarket, debit raw materials inventory account, $100 and credit vendors account, $100. Then, for the payment released to supermarket within 15 days, debit vendors account $100 and credit cash or bank account, $100. The same entries can also be shown as debit raw materials inventory account, $100 and credit accounts payable, $100. For payment released, debit accounts payable $100 and credit cash or bank account, $100. Ledger postings for accounts payable in the books of John's bakery will look like these. Now, let's look into the accounting entries in the books of John's bakery for transactions with the customer, that is the coffee shop. For credit sale to coffee shop, debit customers account, $200 and credit sales account $200. Then, for the payment received from coffee shop within 30 days, debit cash or bank account, $200 and credit customers account, $200. The same entries can also be shown as debit accounts receivable, $200 and credit sales account $200. Then, for the payment received from coffee shop within 30 days, debit cash or bank account, $200 and credit accounts receivable, $200. Ledger postings for accounts receivable in the books of John's bakery will look like these. Now, let's look into the importance of accounts receivable management. Some of these are as mentioned. Cash flow maintenance. Proper management of accounts receivable ensures a steady flow of cash into the business. Reduced bad debt. Effective AR management minimizes the risk of bad debts by keeping track of overdue invoices and following up promptly. It helps to reduce financial losses from unpaid accounts. Financial planning and budgeting. Accurate AR data allows businesses to forecast cash inflows, aiding in budgeting and financial planning. Customer relationship management. Good accounts receivable management includes clear communication with customers about payment terms and deadlines. Finally, let's look into the importance of accounts payables management. Some of the crucial ones are as below. Cash flow control. Effective accounts payable management allows businesses to control cash outflows, ensuring that payments are made on time, while maintaining a healthy cash reserve for contingencies. Avoidance of late fees and penalties. Timely payment of vendor invoices prevent late fees, interest charges, or penalties, saving the business money and protecting its credit rating. Financial planning and budgeting. A well-managed AP system provides accurate insights into a company's financial obligations, which is crucial for budgeting and long-term financial planning, allowing a business to allocate resources wisely. Vendor relationship management. Proper accounts payable management fosters positive relationships with suppliers and vendors. This can lead to better terms, discounts, and flexibility during contract negotiations. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. Also, subscribe to my channel for many such interesting videos. If you have any question, please put the same in comments section. Thanks for watching.